Hey, it's Andreas, and let's take a look at what happens when a split co fund stops paying out dividends. So this is FFN, traded at the Toronto Stock Exchange, and stock price here for the whole year has been down by about 40%. And here in recent days, we found out that they decided to not pay dividend, and this has caused stock price to slide even further. So right now, this is trading at about $4.50. All right, so what's in this fund, you might ask? Well, if we take a look at the quarterly portfolio disclosure, we see that it's mostly big American and Canadian financial institutions. And one of the things that I found to be a bit interesting here is the the NAV here for February was 754 million. And if we take a look at market cap here, it's 237 million Canadian dollars. But these numbers don't really add up. If we multiply 754 with 0.6 to account for the big drop here, we get about 450 million. So is there an arbitrage opportunity? Is there what we call an asset play here, since there's a lot of value on the books that are not being accounted for in the stock price? Maybe this company is being punished too hard by not paying dividends. So I went to the website here of the company to do some more research and take a look at the prospectus here. I stopped reading at page 9, and you will understand why when we get there. Anyways, this is the original prospectus when the fund started in 2004, and they have both Class A shares and preferred shares. The graph that I showed you guys was of the Class A share. So the initial offering here of that was $15 a share. And if we take a look further down, we will see that the objective of this fund is to give you guys a 8% yield. I will leave a link to the description in the description of this full prospectus, so you guys can read all about it on your own time. But the investment objective of the fund was originally to give a 8% yield. That's very nice in my opinion, and we will see in the page 9 why they have not been able to continue with this strategy and deliver on this initial promise. We see here that in the risk, they also mention that the net asset value could continue to drop. Anyways, here, page 9, fees and expenses payable by the company. We see that there's a sales fee here. We see that there's a management fee in this, and we also see that there's a performance fee. So those years when the stock market happens to go really well, sometimes we get those years when the market is up 20%. Guess what? Now we have the performance fee. Great job, managers, you really earned it. And years like this, when everything is going down, well, they still get the yearly fees. And this has resulted in the net asset value of the company, the fund, continuing to drop to this point where they have had to suspend dividends. And the question now becomes, has the fund been punished hard enough by the market so that there indeed is an asset play? I'm not certain about this, and I don't like the high fees. So I will let this pitch go by and take a swing at another stock, fund, or opportunity. Does this mean you can't make money on this? No, of course not. I'm sure that there's a lot of other investors with higher risk tolerance than me that understand a bit more about this complex fund structure and are able to make a more educated decision than me. But based on initial research, I will let this opportunity slip by. Let me know in the comments below. Do you think that this is a buy, a sell? Do you think that indeed there is an asset play here? If we take a look at the listed market cap from Google Finance here and compare it to what the NAV was back in February, do you agree or do you disagree? That's been it for this video, and as always, I hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.